Hello traders, Gary Wagner here, just about noon in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, 3rd day of May, 2019, and this is the daily report for gold and silver, our weekend review, and what a way to end on the week. Although we closed lower on the week, we did close higher on the day. We saw gains across the board in the precious metals markets, in gold, silver, platinum, and palladium, with the dollar providing some fairly moderate tailwinds as it went lower on the day. The interesting fact is that this occurred when we had a very positive jobs report that came in above estimates. That is also occurring after there was quite a letdown when the statement came out from the FOMC meeting, along with the press conference held by Chairman Powell, in which he said that he does not anticipate raising or lowering interest rates. And of course, it was the lowering of interest rates that traders and analysts were waiting to get some sort of a hint on as to whether or not the Fed might in fact do a rate decrease. And that's not the case. Let's take a look at our current pricing. First of all, gold closed up the least in terms of percentage gains, but still had a respectable gain of about $8.20. That's 0.64% to 12.8020. Silver closed well above 2% on the day, although still below $15 per ounce, gained 33 cents at 14.95. Platinum also pretty nice gain, almost 2.5% at 8.75. That's about a $21 gain, and palladium gaining about $22 at 13.6550. Traders, we do have some indication of a potential level of support forming in gold, and we're going to base that on analysis, both a weekly as well as a daily chart. And let's go ahead and take a look at those technical studies. As we talked about in the opening letter today, there are some technical indications on both the weekly and daily candlestick charts that we could in fact be seeing some potential support and some potential bottom that could lead to a key pivot or key reversal from bearish to bullish. Now, there's absolutely no doubt this market has been in a defined and steady downtrend. It has been in this downtrend since hitting these highs at 1350. That came in roughly mid-January to these recent lows that we had both last week and this week. But what I find that is interesting about the action and what we can see when we look at our weekly candlestick chart is the fact that the lows that came in both this week as well as last week are in essence equal. Now, we had a lower low this week. There's no doubt about that, and you can see that by virtue of where this candlestick ends, especially when you compare it to last week. You can see there's a little bit of white space, meaning that this week's low first was the lowest low of the year and slightly below the low that was achieved last week. And the key is that we do have a level of support that we are seeing with these equal lows that are occurring at an important Fibonacci retracement level. And of course, that level is the 0.50% retracement, and that occurs at 1267. That's the first thing we want to look at. The second thing is our daily chart. And the interesting thing about looking at the daily candlestick chart is the identification of a very simple, but in many cases very, very strong two-day key reversal pattern, simply called an engulfing bullish. An engulfing bullish is simply where you have a low and a large red candle, which is your prior candle, and then today's candle opens below or at the closing price of yesterday, but engulfs the entire real body of the prior day. And so when you get a scenario like that, what you're looking for is whether or not you get a confirming candle, and this would be, of course, on Monday. A confirming candle would be a green candle with a higher high, as well as a higher low than the previous candle. So the fact that we are sitting at these lows that are at roughly the 0.50% retracement, and the fact that we had equal lows on our weekly chart, coupled with this simple two-day pattern, actually gives the two-day pattern a little bit more strength because of those other indicators that are confluence indicators, meaning they're all pointing to the same potential bottom. It is for that reason that we're going to look very closely at how this market trades at the beginning of the week. Because as I said, a solid break below the 50% retracement level would certainly indicate that this market could trend lower. And if that would be the case, we were looking at the potential of about 1255, the 0.618% retracement. However, if we get a solid bounce off of this price point, that would indicate that we have weathered this most recent correction and we're going to probably go higher. The question is how high, because what we have seen is a couple of failed attempts in the market in which the market hit a bottom, traded higher, as we can see on all of these occasions, but the fact that we had equal lows rather than a lower low is significant, because that's what gives me the indication that this really could be a potential bottom. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.